today I want to talk about how Coinbase may have taken over the FTX synthetic tokenized shares. These hedge funds and market makers aren't just passing around their short positions, they're also ensuring their methods of kicking the can stay alive and functioning regardless of who is going bankrupt. However, ultimately the clock will stop ticking someday and judgment day will be upon them. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Bitfinex has tweeted saying all crypto exchanges actually own shares in one another. He said Coinbase owns shares of FTX. Fascinating. Tether's banker also owns shares of FTX as well. Even more fascinating. He said at this point, anyone that defends fraud on a crypto exchange should be asked if they're shareholders. We can see that Coinbase Global held 3.9 million common shares of FTX at the time of the FTX bankruptcy. They also held an additional 360,000 Series A preferred shares in FTX as well. That therefore means that Coinbase is likely to take over FTX positions, especially to stay on the good side of these hedge funds and these market makers, likely taking over their synthetic tokenized shares as well. And he also added saying, remember this recording, where a Bitfinex shareholder admits that all exchanges are owned by the same people, just under different shell companies. Therefore, it's potentially likely that both FTX and Coinbase was held by the exact same people, with the exact same intentions and the exact same desires. These people could potentially be working with these hedge funds and these market makers to ensure there's unlimited false locates for AMC and GameStop, and to ensure the can does not stop rolling. You may have seen this tweet from the Red Chess Queen, who said that Citadel passed the tokenized stock debt onto Coinbase. Now, these screenshots are speaking about Coinbase being the German broker that Brett Harrison is speaking of, which I don't think makes specific sense because Coinbase isn't a German broker. Coinbase obviously isn't a German broker, but Randall Cornett found out who actually is. He said, I've posted this before and I'll post it again. Here's the German broker-dealer, in my opinion, that Brett Harrison referenced in the video floating around. Now we can see that Vivid Invest or Vivid Invest GmbH is the provider of the brokerage of transactions on the purchase and sale of fractionalized shares. And Vivid Invest was working closely with, you guessed it, CM Equity AG. CM Equity AG was the partner for FTX that was obviously supposedly custodying all of these actual real shares on behalf of the tokenized securities that were supposedly backed on a one-to-one basis. FTX was obviously providing the brokerage service, and CM Equity was supposedly holding all of the AMC and GameStop shares on a one-to-one basis. And it turns out CM Equity weren't just doing this for FTX, they were also doing it for Vivid Invest as well. Now this is the face or the company behind Vivid Invest. It seems to be an online mobile banking app that also allows you to invest in crypto coins and earn cash back on your everyday spending, as well as invest in stocks and ETFs. And you guessed it, if we go to the CM Equity website, we can see they're associated with or partner with none other than Vivid Invest GmbH, and also Interactive Brokers, which I thought was a really interesting one that I just throw in there as well. And what makes this even more cynical is the fact that Brett Harrison actually had direct communication with Doug Cifu, the CEO of Virtu, right here on Twitter. And guys, if you haven't already, be sure to subscribe to the channel, drop a like down below and ding that notification bell, because that way you'll be alerted when I upload a new video. Doug replied to one of his tweets saying, how about you don't take payment for order flow and use wholesalers like Citadel and like Virtu to get superior execution quality like 200 plus brokers do. He said their execution quality will be inferior and that's simply a marketing exercise. He said he's happy to compare their EQ stats to our clients, no contest. Brett replied saying, we'd love to chat further about this with you, Doug. And again, Doug replied with the direct office number and he said he'd be in tomorrow in the AM. He said he'd get you better execution quality and save the exchange and the ATS fees that you're paying for inferior quality. Let me know what works. So I think this was the introduction that Doug needed specifically to help Virtu and Citadel use FTX for their false locates. This way, Virtu could be the direct partner of FTX and execute all of their trades. That way, Doug wouldn't even have to locate those shares held by CM Equity or FTX. He'd just know they were there and could use them as false locates. If the SEC ever came sniffing, Doug could say, well, we directly partner with FTX and through their custodian service, CM Equity, they're holding 500 million AMC shares. Therefore, we can definitely locate up to 500 million real AMC shares through CM Equity because as far as I'm aware, CM Equity are absolutely holding 500 million AMC shares. Obviously, we know that is not the case, and I'm sure even Doug knew that wasn't the case as well, but he could use those locates as real locates in the SEC's eyes, even though they were entirely false locates the entire time. However, as I said, even though FTX has gone bankrupt, Coinbase may have picked up the buck. However, Coinbase could soon go bankrupt as well, along with many other crypto exchanges. And that is ultimately why at some point the clock will stop ticking and Judgment Day will be upon them. As a prime example, we're now seeing even BlackRock announcing mass layoffs as they've taken on a $1.5 trillion loss in their assets. You may remember earlier this year I spoke about BlackRock losing $1 trillion, so they've now lost an additional $500 billion. This article says BlackRock, which is one of the world's leading providers of investment advisory and risk management solutions, according to Bloomberg, saw their assets under management drop significantly in the last year. The firm's assets dropped from $9.5 trillion down to $8 trillion, seeing a $1.5 trillion loss in assets, up from the $1 trillion loss that it saw around halfway through the year. BlackRock also plans to let go of around 500 members of the workforce in order to try and mitigate the current market conditions. BlackRock is seeing one of the worst performances in many years. And he said BlackRock, being one of the strongest and largest financial institutions in the world, experiencing such tremendous stress, gives great insight on what other smaller and less established firms are likely experiencing as well. However, I do think that one specific statement is very, very interesting and links in incredibly well with this comment from Untouchable. He said it's interesting to see how Citadel and some other hedge funds like it are showing profits in a market that is tanking. BlackRock, one of the largest asset managers in the entire world, is down $1.5 trillion. So if arguably one of the largest and best asset managers ever to exist is down $1.5 trillion, how is Citadel up nearly 40%? And on top of that, why are Citadel clients pulling money out at an expeditious rate and an expeditious amount? Why are clients panicking so much and taking out so much money from Citadel, so much so to the point that Citadel actually had to limit withdrawals to like 5 or 6% a quarter if Citadel are making record profits? As Untouchable said, he said something doesn't quite equate here. If Citadel are making these record profits, why are investors withdrawing from Citadel at a rapid rate? So fast, in fact, that Citadel are limiting those withdrawals. Again, as I said the other day, it really ties into this whole Bernie Madoff thing and the similarities between Ken Griffin and Bernie Madoff. Bernie Madoff was obviously supposedly generating crazy returns through the dot-com bust, just as many other hedge funds around him were failing and going bankrupt. It's the exact same thing in 2022 with the likes of Ken Griffin and Citadel. Many hedge funds are down over 50% like Tiger Global, but somehow Citadel is up nearly 40%. And finally, Mac Turner's tweeted saying we've just seen the biggest percentage Bitcoin rally since cryptos peaked in November of 2021. And he said at each of the last 2 backtests of the Bitcoin 200 moving average, the S&P 500 imploded. We can see the first time Bitcoin hit this 200 moving average, it was around the very end of December when the S&P 500 then tanked. Again, when Bitcoin popped up and hit this 200 moving average again, it was back in like May time and the S&P 500 tanked again. Well, Bitcoin has just touched this 200 moving average once more, so you can guess what's going to happen next. As the S&P 500 tanks again, it will wipe out even more hedge funds and could potentially stop that clock from ticking. And obviously if it does, hedge funds and market makers will be seeing their judgment day. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.